This is Converge, a podcast from Convera. Come with us as we shape the future of finance.
Welcome to yet another Converge episode at Money2020. It's day 2 here. It's been a busy one for sure, but we're lucky to have one of the prolific speakers at the event and also someone who happened to just release a book join us to discuss the topic of that book and a bit more broadly some of the innovations happening in the payment space. This guest is Rita Martins. She penned a book called Web3 and Financial Services. She's also a startup advisor and board member. Great to have you, Rita. Thank you for giving the time to us. Can you share a bit about your background and how you also became involved with Web3 and what excites you and why you're working, or at least providing thought leadership and also wanting to work in the intersection of Web3 and FinServe? What drove you here to this great spot?
Yes, thanks, Alex, for the invite. So I have worked for a number of years within the traditional finance space. So I started my career in consulting company, always looking into new technologies and how banks could use it for their innovation and for their vision around how to innovate. I also work at HSBC, so I was the global head of fintech partnerships there. And also trying to bring some of the blockchain technologies to partner up with the bank. I have been looking into Web3 and blockchain for a number of years. When I started looking, it was too early, to be honest. The technology was too early. I think even at the time, we were still looking into automation, RPA. So it was definitely too early for Web3. I think right now, given some of the new things that are happening around regulation, banks have already really tested this technology. They really see the value, and you have seen big names like BlackRock, for example, really going for it. It's definitely a change in the blockchain environment, and I think it's really showing the benefits. However, I still feel like when you look into the news, you still see just the bad side of it. You still see the big collapses, the FTX problems, and so on. And so I wanted to write a book that really explains what are some of the use cases, what does it mean for someone working within financial services, and also, I mean, it's still an evolving space. So what are some of the changes or things they need to change within the ecosystem for it to really be mass adopted by financial services?
Yeah. Well, we on this podcast are particularly interested in that, and I've had quite a few guests on who are either part of fintech companies that have plans to use crypto-enabled payments or payments on the blockchain of some sort are part of their roadmap. And of course, we want customers to be prepared for innovations that could become more mainstream down the road. So having discussions about Web3, a lot of people will say it's esoteric, it's not real, or it's a utopian vision that hasn't sort of made its way into the real world. I think a lot of change has happened over the past few years. So there's actual, use cases starting to happen, which is exciting. But how do you define, if Web3 is sort of the catch-all phrase for the future of state of the internet, and then we have the state of the internet of value, which relates to the financial services and how money would be moved. How do you define Web3 as someone who thinks about it in the context of financial services? Is it the internet of value? Is there something broader than that?
So I think of it broader than that. I think it's really just an ecosystem of companies, traditional companies, and also DeFi companies, decentralized companies, who are building new innovation using blockchain technology. When it started, there was a lot of focus around decentralization and data ownership. I think we have move on from that, and we're now just trying to get the right balance between ownership, decentralization, but also being protection and security to the clients, because it's financial services. So you also need to make sure that you have the right tools and controls in place as well. So I think of it as a much more broader ecosystem of companies who are just using the new internet, the Web3, the blockchain.
Yeah, it's well said. So let's turn to your book. You just launched it here. It's called Web3 and Financial Services. And in it, it looks like you have a range of examples of how these new technologies are being used already, from traditional players like Fidelity and JP Morgan to disruptors like Coinbase, Circle, and Ripple, some of whom we've spoken with on this podcast about their applications of the technologies. So could you highlight a couple of innovative projects that really excited you and inspired you to write about them?
Sure. I think there's a few within the emerging markets which are super interesting. So one of them is using stablecoins for remittances. So in the Philippines, many people will go and live abroad. They're going to work abroad, but then they send money home to their families. And they are using stablecoins to send that faster, but also much cheaper for them, which is a really interesting one. And the second one is really around the tokenization, the word that it's used and overused within this space. So there's a company called Goldfinch, which they are, again, using real world assets as a collateral to provide loans for companies in emerging markets. So it's very interesting how emerging markets, especially being a place where, let's say, financial system is still not as developed as it is in Europe, UK, or US. They're really driving and using some of these technologies for very interesting, innovative solutions.
Yeah. What are currently the biggest challenges that financial institutions are facing with trying to implement Web3 or DeFi tech? Is, to borrow the overused phrase from Gartner, are we in a trough of disillusionment when it comes to Web3? What's the biggest blocker in terms of the vision versus the reality right now?
One of the biggest problems that we had for many years in financial services, especially if we think about traditional companies coming into this space, was really the uncertainty or lack of regulation. I don't think you will see many banks going fully into this space until you actually see some regulation going for it. And I think as well, in terms of the technology, we still need to have some developments in the technology for it to be used within financial services. So if you think, for example, about public blockchain, one of the key features of it is transparency. And that is great for some use cases, but for financial services perspective, you need to have some privacy. You need to have privacy of clients' information, but also companies, they don't want to make it available, their data, for their competitors to see. So I think those were the two main ones. And for a long time, I think there was also a lack around just skills or really understand this space, because it's such a new space. I think that has changed much more now. Even within regulators, we have seen them hiring people. There are much more technologists that are coming from the crypto or the DeFi space, whatever you want to call it. So I think that is changing a bit as well.
Do you think, you mentioned public blockchains and the privacy concern, do you think that given the fact that, a public blockchain is sort of a key piece to a globally interoperable financial system, at least in the way that many see it, do you think there will be eventual sort of acceptance in the financial services world of utilizing a blockchain that is able to connect, various sort of closed systems? I know the BIS is experimenting with these things right now. Do you see that a good roadmap towards that?
So it's an interesting question. Is one that I asked a few people. So for the book, I interviewed a few people and asked them exactly that question. So public versus private blockchain, which it's always an interesting one. Yeah. The main view within this space is that eventually we will be using public blockchain. However, that public blockchain might be different than what we see now. So if you think about Ethereum, for example, it's already different than it was in the beginning. So I think the journey of the vision is that eventually we'll use some form of public blockchain, but it's going to be different. It's going to have the privacy layers and the compliance layers and so on. But before we get there, we're probably going to have this mesh of different blockchains. They are connecting together. And that's the key thing, is interoperability between the different blockchains, but also between the blockchain and the legacy systems. We will still have legacy systems going for a while. So we need to make sure that both worlds are working and connecting together.
Yeah, and it sounds like some of the fintech companies in the space are building that compliance into their ledger. They're ISO 20022 compliant. They have a compliance first mindset approaching this. So I feel like, they know that there's a chance that their products and services will fit into TradFi if they follow those rules. And eventually, once we have regulation at the government level globally, it feels like they know what's to come, which is great. Would you agree with that?
Yeah, no, I agree. I think that's the right assessment. And even like within the DeFi space, looking at some of the projects that have a DAO governance, they looked, for example, into registering as an entity, because then they connect and they can partner with traditional finance.
Yeah.
One of the key things is that you have this big liquidity and distribution within traditional finance. Mm-hmm. So for some of the projects and some of the startups, they want to tap into that liquidity. And to be able to do that, like you're saying, they need to have the compliance, the privacy layer, and all the layers to be able to actually even start having conversation with traditional companies.
Yeah, and I'm wondering, given the fact that there was a recent Financial Times article, they published a long piece about how challenger banks in the UK, they haven't really eaten into the market share of traditional banks yet. And I wonder, if that's a premonition of what's to come with the challenger, blockchain companies that are challenging the payment rails or traditional ways of sending money. Do you think that expectations have changed around the possibility for fintech startups to take market share because of that fact that they've sort of struggled to so far, eat up a significant amount of market share from traditional banks?
I think when they started, so there was a big wave when fintech started. They started with this B2C, so business to consumer, which, like you're saying, they came in with the vision of, we're going to disrupt finance, we're going to take banks' jobs, and we're going to take their customers. Yeah. But the reality is that financial services is super complex, and many of those companies have flipped, and you see many more now, they are B2B, so business to business. And because they found out that actually if they partner with traditional finance, like we were just talking about, they can have access to that liquidity that the banks have. And that's definitely something that I see that it's happening, and I think it's going to be the way forward. Is you're just going to have more and more collaborations, and it's going to be similar, to be honest, even with the Web3 space. You're going to see companies that started with this very disruptive mindset. They're saying, well, actually, let's instead partner up with some of the existing players.
Yeah, we do seem to be seeing that quite a bit. Ryan Rugg from Citi was here, and she was an interesting guest. She's the head of digital assets for Treasury Trade Solutions there. And we spoke about tokenization, which is the big buzzword here, as you mentioned, which is something that really seems sort of further along the roadmap into where it is poised to disrupt some of the traditional financial systems and instruments. So I just wanted to ask you, what's your opinion? How do you envision tokenization impacting global financial markets and global financial services in the near future? Do you think it's really on the cusp of making a big impact, or is it a bit further down the road?
For sure. I think we have seen some very interesting new solutions within this space. And for me, the big value of tokenization is not just you tokenizing an asset, but it's what can you do afterwards. So can you use some of those assets for collateral? Some of for example, JP Morgan and your next team, they have done some repo agreements where you can have much more liquidity and you reduce costs. So I think tokenization is one of the big use cases within this space, but it's much more around what it's going to enable the next step. So it's not just that you can have an asset tokenized, but it's how you're going to use that afterwards for existing solutions and also for new solutions that I'm sure we'll see new solutions that we haven't even thought about nowadays.
Yeah, no, I agree. As I said earlier, I caught your session with the BIS and R3, and there was a focus around CBDCs and the roadmap to adoption, the technical hurdles. What, in your view, are the technical hurdles before a central bank digital currency becomes something that is either accepted at a sort of a mass adoption level or not? I mean, it's obviously highly sensitive to the culture and the political environment within which it's being deployed. But do you see those as the biggest hurdles, or are there other technical ones?
So it also depends like which types of CBDCs we're talking about. Maybe let's start with retail ones. And I think retail ones, for sure, one of the biggest problems for me is also how consumers or people on the streets think about CBDCs, and many of them are worried about the possibility of the central banks to have being able to see all their data, what transactions they do. The reality is that many of the central banks that are looking into CBDCs, they are looking into a privacy layer. So I think for me, it's much more around education, the consumer, but also making sure that how are they going to make sure that the consumer is using. So it's not just because you have a digital CBDC that consumers are going to be using it. So how are you going to make sure that that's actually used from wholesale CBDCs? So it's much more complex, especially if we're talking about cross-border payments. And in there you have the whole interoperability issue or challenge, let's say, but also you have the whole governance and regulation space. So different countries, they're going to have different regulations, they're going to have different governance. And how do you bring all those countries together to make sure that you have one set of rules, let's say? And that's also one of the biggest challenges or considerations within this space.
Yeah. And that touches on the subject of that whether or not the public blockchains could be utilized to connect, siloed central bank networks. Given the open nature of decentralized finance, do you think, in your view, can it be adopted to the needs of wholesale users of CBDCs where privacy is key? I mean, we touched on that already, but if we're talking more specifically about CBDCs.
I think to start with, like we're talking about, we're probably not going to see a fully decentralized solution, if I'm honest. I see this a bit as a journey, both from the consumer, but also from the central bank's perspective. And I know a lot of people say, well, but then what is the difference between what you're doing nowadays versus this big vision of decentralized finance? But I think we're going to have some solutions that are much more in the middle side of it. Digital identity will be a big enabler here. And again, are we going to have a fully decentralized identity solution? Probably not. So, for example, in Europe, they are already looking into digital identity, and they are using some interesting solutions like zero knowledge proofs and so on. So I think we're going to see some of these solutions using some of the interesting concepts that came from decentralized finance and Web3, but we're not going to see a fully decentralized finance or public blockchain, at least to start with. We're not going to see that.
So traditional finance is sort of picking and choosing, cherry picking the parts of Web3 that work in the current system.
Yeah.
But eventually you think it'll move more fully into a decentralized environment.
Yeah, I think eventually we'll get there. For now, they are just looking into some things. So there is another interesting one. There's a project called Project Mariana that was done with central banks as well. And they used AMMs. Don't know if you heard of that. So exactly. So those are very, it's an innovation from DeFi. It's pure DeFi. So they're using a private blockchain, but they're saying, well, actually that innovation is interesting. Let's test that. So I think we're going to see more and more like that. And then eventually as we evolve and as the technology evolve as well, then we're going to go further and further down to decentralization.
No, it's fascinating to see that those things are actually seeping in, and you have huge money movers like BlackRock, investing in ETFs and securitization through tokenization. So I think it's definitely, it's coming into the fore, these technologies. Talk about the consumer, like the customers. If we're talking about, obviously the technology can help businesses innovate, but on the end user, if we're talking about retail products, the kinds of folks, we obviously have mostly businesses who work with Converge. We're not a retail services company, but what is in it for end users, whether they're businesses and customers, in terms of the benefits they're going to most derive from the integration of these technologies and the growth of these? What are the real user benefits?
Yeah, so you can have some cost savings, of course, by automating some of the existing processes, but also you can have new solutions that you can provide as well. You're also going to can tap into a new set of customers. The other interesting part is like, even if you think about the retail customer, for example, which is global nowadays, everyone is global. You can also start using some of these concepts, for example, for cross-border payments to make it faster and cheaper, like we talked about, or even simple things like payroll. Nowadays, we have many companies where they have the employees living in the few different countries, and if we had CBDCs, or if we have stablecoins, if we have a digital form of money, then you can use that to make the payroll in a faster and cheaper way as well. So those are just some of the examples.
Payroll makes a lot of sense for faster and cheaper being a huge benefit. But when you think about those more large-scale wholesale payments, I wonder, are they really wanting or needing more speed? Isn't it, isn't the biggest use case for them more of a fully compliant solution that is transparent, reliable, trustworthy, and that part of that, having that trust, has to be a certain amount of time that's baked into the transaction so that they feel like there's at least enough, diligence done to make sure it's secure?
Yeah, it's a good question. And so some of these solutions within blockchain, they will have that. There are many, especially within the traditional finance again, the settlement is not going to be immediately. They're going to have a bit of lag, or they're going to have some rules within the smart contract that enables them to pull back any payments that they need to have. So that's definitely something that, again, they're going to use some of the technology and concepts of blockchain, but they're going to still change it slightly to make sure that they are compliant, that if there is fraud or if there is a cybersecurity risk, that they can use it.
That's good to hear. Because even just last year here, when we were talking about this subject with guests on the show, they were saying they were not really talking about how, with an instant payment scheme on blockchain, how you would mitigate for having to get the money back. But now there are solutions that I've heard from some of the companies here to solve for that, which is big.
Yeah, exactly. They are design questions that either companies are going to build it themselves, or they're going to partner and try and find the fintechs that are building it for it. It's still financial services. It's still people's money. So we need to make sure that it's controlled, that they are protected, and so on.
So where do you see, if we were to look way down the road, I know 5 years is kind of a long time in tech because things can move fast. But they can also move slow because we're in financial services. So let's say 10 years from now, do you really see us living in this world of the finternet, as the BIS puts it? Is that where we'll be in 10 years, do you think?
I think in 10 years, this is going to be just, users, they're not going to know if they're using blockchain or if they're going to use financial services. I think we're going to stop talking about the technology and actually start talking about what does it mean? What are some of the use cases? Similar, like when we talk about cloud, for example, cloud has been in the making forever, but your users don't know if your bank is using cloud or if it's on-prem solutions. So I think blockchain and all the tools within this block will just be part of the tools that a bank and the financial services company will have. And within that, they're going to have blockchain, they're going to have cloud, they're going to have your AI. They might even have quantum computing, which is coming. So I think we're going to start moving into that space, and hopefully we'll see, I think probably tokenization, we're going to see big solutions coming into that. But from my end user perspective, they're not going to even know what is done. For the book, I actually found a survey in the US where they ask people, do they know how the internet works? And everyone uses the internet. And so 1 in 3 people did not know. And the ones that did know, they would say things like, it just does, or it's on the clouds.
They don't talk about TCP IP or what exactly that is. Yeah. So the new protocols are being built that will just fade into the background, but they'll power everything, basically. Nobody will know.
Exactly.
Yeah. Well, that's exciting because I think it unlocks a whole broad spectrum of benefits to customers, to businesses, and it's only a good thing that we're having finally conversations like this at FinTech conferences. So it was great to have you, Rita. Thanks so much for joining us. And go check out Rita's book. It's Web3 and Financial Services. I assume it's available starting a few days ago.
Yes, it's starting on Monday, the 3rd of June. So go and check it out. It's available on Amazon, on your local stores.
Great. Well, we'll be doing that for sure. Thanks, Rita. Great to have you.
Thank
All
you.
the best.